stock of the day, I thought we'd take a look at Seek, the online labour recruitment platform, hiking full-year earnings guidance after more than doubling first-half profits, thanks to a surge in sales revenue on the back of a recovery in the jobs market, which was hit hard by the COVID pandemic. Company also reinstated its dividend, 23 cents a share declared. Market liking the news, earlier touching a 9-month high, currently sitting up just over 8%. It's cracked $30 again, heading into the afternoon session. Mark Moreland from Teaminvest, what did you think of Seek's update? And Seek around that $30 area. It was only sort of a couple of years ago, the short sellers sort of slammed into Seek and they were sort of questioning their China operation. It's had a good solid bounce, hasn't it?
It has, but it needed it, Koshi. I mean, if you look at the earnings over the last few years, they sort of peaked out at about 65 cents per share in 2017, then it was 62 in 18, 50 cents in 19, 27 cents in 20, and then negative $1.48 in 21. So there's been a continual slide there of earnings, but at the same time, their sales have been going up, which not a lot, but they're sort of keeping up with inflation, but earnings have been going down. So they've clearly had a very bad coronavirus in 21, because that loss is the equivalent of about 6 years of what the 2020 profit was. So unfortunately, though, the share price has gone back to, as you said, to $30 today, which is sort of close to all-time highs. I mean, the trailing 12 months was an all-time high at $36.09, but they've had earnings have been sliding. So even though the earnings have gone up for the half, it's off a much lower base now as well. So I think it's way overpriced for what their earnings are at the moment, and because they were already declining. And I think a lot of that was to do with the overseas operations, because Seek was a fabulous wealth winner for Teaminvest going back up until about 5 years ago. We sort of haven't really been that interested in it since then. There's a few members who have kept the belief and so on, but as happens with a lot of companies in Australia, once they become the dominant player, which Seek is, they then have to go overseas. And when they go overseas, they have to make acquisitions typically, and they usually have to pay big dollars for them because they're in a sexy area, and usually they're not making any money. So then it becomes a drag on their earnings in Australia. So it's a hard act to get right, and they may well get it right. But at the moment, I personally wouldn't be interested in it at the current price, because we're showing fairly big negative return at the moment, even with on the announcement if you paid the $30 for it.
Okay, Michael.
Yeah, look, I pretty much agree with Mark on this one. I mean, it had been struggling up until this result. It's coming off a low base. Yep. The initial reaction of the market is quite positive, because a lot of the analysts were expecting some sort of result like this, or an upgrade to earnings. It looks like it's a little bit better than what was expected, but I think even up at these levels, above $30, it's been as high as about 36 recently. To me, it looks like it might want to pop up towards potentially sort of 32, 33. Might want to get back up there, but I'd just be wary that we might then see some profit taking coming in based on valuation and just the volatility of the stock. Coming back to how it's been trading on the chart, I think they might encounter some headwinds. So obviously, we're expecting in some respects this type of result, but I just wonder, where will they be in a year from now once everyone's done their job movements and churning, and that's all happened, and the structural issues with Seek come to the fore again.
Okay, all right, so not for you either.